Okay, what's up, everyone? Today we are going to go over my yield curve chart layout. Now, a lot of people don't actually know this, but you can get economic data within Thinkorswim, specifically the yield curve in this example. Now, there are different yield curves you can look at. One of the most popular is going to be the 10-year, 2-year yield curve. So we're going to break down this chart layout and go over how I like to use it personally and what I see different maybe than what some other people see differently about it. Now, this chart, okay, is going to feature the 10-year and 2-year Treasury yield curve with the Fed funds rate in purple. So the purple line on this chart is going to be the Fed funds rate. And then we've got the S&P 500 on the bottom here in white. Now, the vertical lines, those mark periods where the yield curve has stopped being inverted. Everyone always talks about the yield curve inversion, but it's really when the yield curve is not inverted anymore that matters the most, okay? Now, the yellow line on the chart is going to be zero. Okay, so when it's below zero, the yield curve is below zero, that means that it is inverted. Okay, now, typically, the Fed, this is when you start to see a recession. Okay, is when the yield curve inverts. Historically, you have ended up seeing a recession. Now, specifically at the time of this recording, we're basically halfway through 2024, and a lot of people are worried about a potential recession because of the yield curve. And then a lot of people are also talking a lot about Fed rate cuts, right? The Fed has pretty much taken over the market over the past year or two, really the past 2 years, ever since they started doing their rate hikes. And now everyone in the world is extremely focused on the Fed and Fed rate cuts at the moment. Now, what I want to show to people, okay, is when you look into this chart, and I've done some videos before, but this is the chart layout, and this video is going to be included in the chart layout package, as I've got, several packages for sale now of different chart layouts that I use to measure intermarket analysis, market breadth, market internals, and many other different things. What I really want to highlight to people is the purple line going down means that the Fed has cut rates and began cutting rates. The purple line going up means the Fed is raising rates. They are hiking rates. And when you see it flat here, these are rate pauses, okay, which is the current environment that we have in the market right now. Now, something interesting to note to people is that the yield curve going inverted is actually not super bearish, okay? And we're talking about once it inverts. Now, what do I mean by that? Well, look at this period here. We see the yield curve drops below the zero line here, and the stock market is continuing to go higher. The problems and the recessions tend to occur as the yield curve is uninverting and is no longer inverted. So you see here, once we cross above this zero line, the yield curve is not inverted anymore. And what do you see? Well, the Fed is actually starting to cut rates now. This is when we're seeing the purple line go down, which is again the Fed funds rate. And look at the stock market, not a great performance there. Same thing over here. We have this long pause period, and then the yield curve uninverts right here. And you see shortly after the Fed starts to cut rates, and shortly after the stock market starts to drop. If you look at where we're at right now, the Fed funds rate is flat. And in my opinion, it's because the yield curve has not come out of being inverted. So, if you're trying to time rate cuts and all of these different things in the market, this is going to be one of the most important charts for you to watch because the closer we get to the yield curve being uninverted, historically, that is when we have started to see the Fed really cut rates, right? And then we also know that lots of recessions have preceded, or come after, these yield curve uninversions. And we also know that the Fed typically, whenever they're cutting rates, it's because they're in fear of a recession and they're actually starting to try to stimulate the economy. So just a quick video on how I use this chart layout, why I like it so much, and how potentially you guys can use it here as well. Thanks for watching. I'll see you in the next one. And don't forget, if you want these different chart layouts where you don't have to go through the hard work of setting up multiple different charts and then saving them and having to go through them, you guys can access them through the chart layouts and get access to all of my different chart layouts. There's links in the description for those, okay?